director of the CalAccount Blue Ribbon Commission. This commission has been tasked with doing a feasibility study on un- and underbanked Californians and the best way to provide services for those citizens. Thank you for joining us here this afternoon in Oakland. This is the second of 3 public hearings. The third will be tomorrow in Los Angeles. And we have 2 very exciting speakers with us here today, and I will also be giving you a little bit more information about the feasibility study and what we're looking at and where we are in our progress with that. Up first today, I'd like to invite Cecile Isidro, the Communications Director for SEIU California, to come up and give initial remarks. Cecile?
Good afternoon, everyone. Hey, Jess. Tia Orr, our executive director, really wanted to be able to join today, but an emergency came up, and so I'll be delivering her remarks and sharing our support for what will be a life-changing program for millions of Californians. First, I really want to thank State Treasurer Fiona Ma and the CalAccount Commission Executive Director Cassandra DiBenedetto, pardon me, for making this town hall a reality. We all know how important it is to get input, to hear directly from community members who will be affected by this. And I really appreciate the tremendous work they're doing to make sure that leaders in Sacramento hear directly from community members, from all of you, and making sure that your voices are heard. So as I mentioned, I'm from SEIU California, and I want to give a shout out to a member of our executive board here too, Teresa Rutherford. And SEIU California represents more than 700,000 workers in the state. Our members are the caregivers providing help and support to the elderly and disabled in their homes and in nursing homes. They're the public service workers who connect people with food, housing, and jobs. And, you know, just having finished the storms, we just know how valuable, how critical their work is when there are times of public emergency. They're the frontline healthcare workers in our hospitals and clinics. They're janitors who keep buildings such as this clean, and our fast food workers who are an essential part of our community and are essential workers. Our members provide critical services to millions of Californians, but many are continuing to pay the high costs of mainstream banking's failure to serve low-income communities, immigrant families, and families of color. We all know we need access to basic banking services, whether that's to pay the rent, to keep the lights on, to buy food to put on our tables. But at the end of the day, you know, we hope to be able to set aside a little bit of money to save for emergencies or, you know, our children's college funds. But for generations, banks have effectively shut low-wage, Black, Brown, Indigenous, and immigrant families from accessing affordable basic financial services and deepened the ever-widening racial wealth gap. We know that nearly 1 in 5 California households are unbanked or underbanked. This includes more than 30% of Black households in our state and more than 30% of Latina and Latino households. Despite representing only 20% of California households, households earning 30% a year or less comprise 60% of the unbanked in California. That means no option but to turn to high-cost services provided by check cashing joints and payday lenders that charge extortionate interest rates and fees and trap borrowers into cycles of debt. And as research shows, and you'll hear from experts later on today, research shows that banks offer worse terms to customers of color. A Citibank report said that banks in predominantly Black neighborhoods tend to require higher initial opening deposits and higher minimum balances. And Bankrate.com, they reported that Black and Latina and Latino consumers pay higher checking account fees than white customers. Everything from paying electricity bills to buying groceries depends on the use of debit or credit cards nowadays. But for the communities who have been chronically financially underserved, this means additional cuts to their take-home pay. I want to share with you the experience of one of our members, Anisha Williams, who's actually been really active in speaking out for CalAccount. She's a single mother of 4, and she works 2 jobs to provide for her family. She's an in-home caregiver and also a fast food worker. In the past, she's banked with Chase, with Wells Fargo, with Bank of America, and over the years, banks have charged her hundreds of dollars in overdraft fees. Instead of stopping payments when there wasn't any money in her account, her bank just kept charging her for the money she didn't have, and she would get penalized for every time they charged her. So on top of having to pay $400 or nearly an entire paycheck from one of her jobs in overdraft fees in 1 year, she had to pay $10 a month because she couldn't meet the $500 minimum deposit requirement of her bank. So if your paycheck is $400, how are you going to meet that $500 minimum deposit, right, after paying the bills? Today, Anisha is one of the millions of Californians who are unbanked, paying money just to cash her paycheck or pay her bills, money that could go towards basic needs. And unfortunately, and you'll hear from folks today, Anisha's story is one that we just hear too frequently. Instead of banks helping her get back on her feet and save for the future, banks are making billions each year in bank account fees. In 2022, consumers paid more than $37 billion in bank account and financial transaction fees. Our state has made the commitment to dismantling systemic racism, to making right the discrimination and disadvantages that Black Californians and communities of color still face today. And that's where CalAccount really does come in. It'll have a positive impact on the economy. It'll put money into the wallets of working people by saving them hundreds of thousands of dollars from bank fees and penalties. There are a whole range of studies, and you'll hear from experts today, like I said, exploring the impact of money staying in the local economy versus going to large multinational corporations. One particular study demonstrates one way this might happen. So for each dollar going into the pocket of low-wage workers, that adds $1.21 to the economy, while each dollar to high-income employees only adds 39 cents. In other words, this program isn't just essential for low-wage workers, it's also a boon for the California economy. This program will also provide a way for the state to move benefits more quickly and efficiently. The state is currently paying tens of millions of dollars to distribute benefits to Californians on prepaid debit cards, despite having a troubling record. The U.S. government fined Bank of America $225 million in 2022 for automatically freezing people's unemployment benefit cards at the height of the pandemic and making it extremely difficult for them to unfreeze their cards. The use of prepaid debit cards has been costly. It's been a cumbersome method for Californians to receive the benefits they need. CalAccount, on the other hand, would be a simple and safe alternative to transmit benefits to currently unbanked Californians through direct deposit into their own accounts. I just want to close and turn it over to other folks and by saying we look forward to seeing how this commission will analyze the wide range of benefits the state can reap from having a reliable infrastructure to move benefits securely and quickly to low-wage workers and families in need. We know there's a better way forward, and CalAccount is within our reach. It's one way California can break down the barriers to opportunity for our communities and to end the cycle of debt that too many working families are trapped in. It's one way to pull struggling families out from under predatory fees and to build a solid foundation for a more productive and a more equitable economy. Thanks.
Oh, no, I'm calling in so I can listen while we walk.
Thank you so much, Cecile. Up next, we have Dr. Nari Ree from the Berkeley Labor Center. Dr. Ree?
All right, so I'll speak up. Incidentally, I direct the retirement security program at the UC Berkeley Labor Center. I'm just going to address some pre-existing models that we already have of states, especially California, leading the way in serving unmet financial needs and really doing that, delivering value on that because it's a public sector working in a private sort of public-private partnership. So there are 3 programs that already exist. Scholarship 529 College Savings Account, which serves predominantly middle-class families saving for their children's college education or other educational needs like job training programs. I was particularly involved in the Cal Savers Automatic Retirement Savings Account, which allows particularly low-wage workers whose employers don't offer any kind of retirement plan in the workplace to contribute monthly out of their paychecks into an individual retirement account that travels with them from job to job.
Dr. Reed,
Yeah.
Are you in the back?
Oh, sorry. Okay, I will. Okay, all right. I will try to speak. I have to slow down a little bit. And the 3rd program is CalAble, Achieving a Better Life Experience account. And that enables people who have disabilities to basically be able to, build wealth, right? Invest in themselves with some without fear of losing their benefits. Incidentally, all 3 of these programs are run by the state treasurer's office, and all of them have public boards. So I'm going to kind of go into the origins and just sort of the scale of these programs. And I think they really serve as good examples of what the state can do when it identifies an unmet need, right? And then actually sets up a program with that really serves the public interest and the consumer interest. So the 529 college savings accounts have an interesting history. It didn't start in California. It started with a bunch of states, including Michigan, basically defying the IRS and saying, we're going to set up these programs, and then basically pressuring Congress to give them favorable tax status. And in California, that started in the 1980s. The California Scholarship Program started in 1999. And so in all of these programs, including California Scholarshare, the account administration and investment management functions are handled by private sector, private financial service providers that have to, compete with each other, right, to be able to get the contract from the state. And that winds up lowering the fees that the program is able to charge. It also means that by aggregating, right, lots of different savers into one contract, what that allows the state to do is that the state has much more bargaining power in that instance than any individual account holder can. And so then they're able to basically get the best in class services, right, at the lowest possible fee and compete with, sort of big institutional fund managers in a way that sort of retail account holders aren't able to do. So the 529 accounts in California now have $12.7 billion in educational savings. I think about $750 million went out last year to fund educational expenses. And there are 400 million accounts, right? So this is a fairly well-established program. Cal Savers arose because about California, half of California workers have no retirement assets. And I was involved in a study about 10 years ago that found that half of private sector workers in California are looking at ending up at something basically with not enough to live on when they retire, below 200% of the federal poverty level. And there was a major market failure there in that the employers who offered 401ks and pensions were generally doing it to attract and retain higher wage employees. So employers in the low wage labor markets just weren't offering plans. Another obstacle was that for small businesses, plans can be kind of complicated and expensive to set up. There's fiduciary liability, which means that they're financially on the hook for how these programs are run. And all of that wound up with this really kind of patchwork system where a lot of workers were being left out. And of course, workers of color, right, the workers that dominate the low wage labor market were sort of least likely to be able to access any kind of retirement benefit. And so what California did, this is essentially like a 10-year-long process, but basically I finally got to a point in 2016 where they had legislation mandating that employers with 5 or more employees, if they don't offer their own plan, have to automatically enroll their workers into a state-sponsored IRA, Cal Savers. And then individual employees at that point could choose to opt out if it wasn't right for them or if they felt that they couldn't afford it. I believe right now there's actually been new legislation upping the limit, the threshold to basically any employee, right? If you have any employee besides yourself, there's an upcoming deadline so that you also have to participate. And the contribution rates start at 5% a month, 5% of your paycheck, and then auto escalates if you don't opt out to 8%, because really over a lifetime you need to be saving around 10% or more of your income, like on a very steady basis. And the nice thing about these accounts is that they are portable from job to job, and we don't have to worry about rolling them over unless we want to. So again, just like Scholar shared, the account administration and investment pieces are handled by private financial managers who get sort of institutional, like high-grade investment expertise at relatively low cost, and the state caps these fees. Currently the fees are higher than what you would get in a large corporate account, but they're still significantly lower than what you would get on average for small and medium-sized businesses. And those fees are going to trend down over time as average account balances go up. Right now, there's about 500,000 accounts, totaling $766 million, with an average account balance of $1,500. It was about $30 when it started, so it is steadily growing over time. And this is the case of California. It was one of the first states, really, actually the first state to pass legislation, the second state to actually stand up a program, and really face some regulatory headwinds from the federal government about whether or not they could do it, and ultimately won, right? I'm not going to go into that whole history, but like the state really fought for the right to be able to offer this kind of service for low-wage workers. And finally, is Cal Label, which and the background on that is that, that people with disabilities, right, maybe on federal benefits, disability benefits, rely on programs like Medi-Cal, Medicaid, and a lot of aid programs have very strict asset limits, right, that basically keep you in poverty because they don't ever allow you to build any kind of safety net or buffer for yourself. And so in 2014, President Obama signed the ABLE Act, allowing people who became disabled before age 26 to put some money away and invest it, right? And get tax benefits for that, and not trigger those asset limits that would cause them to lose their benefits. That has recently been raised to age 46. People who became disabled before age 46 as of 2016. So currently eligible people or their family members or their employer can contribute up to $18,000 a year into this account. And it has to be spent on disability related expenses that support or improve your quality of life. And that's defined very broadly, from like paying for medical expenses, if you need to, build a wheelchair ramp, to buying a home, right, or getting an education. So like scholarship and CalSavers, right, the day-to-day operations of account administration and the investment management piece are handled privately, right, under contract with the state. All three of these programs have public boards that provide oversight, and there's also oversight by the state treasurer's office. So to conclude, California is already running three, pretty high quality programs where they've proven that they can partner with the private sector to meet very important financial needs that the private sector was either just ignoring or is not in a position to do as cost efficiently, right? When there's profit motives at stake, right? Having that public oversight is a really important component, as well as the ability to bundle consumers together so that, that we have power, right? Bargaining with the financial sector in a way that we don't when we do it individually. So and I think those three programs are really good models for how, how accounts can think about how they might be structured. Thank you.
Thank you so much, Dr. Reed. Up next, I'd like to invite Emily DeVito, who's the Deputy Director of Corporate Power for the Roosevelt Institute.
Thank you. Good afternoon. I am going to start with some of the things you'll brilliantly laid out about the problems of bank access. And then I'm going to highlight some findings from my paper that I produced at the Roosevelt Institute called Banking for the People, Lessons from California on the Failures of the Banking Status Quo. And there are some copies in the back if anybody would like to take a look. But my name is Emily DeVito. I'm the Deputy Director of the Democratizing Finance Program at the Roosevelt Institute. So full, free, and fair access to the money you own and the financial systems in which it can be safely stored is a requisite for families to be able to achieve economic security. America's current banking system is fee-based, which creates a tiered economy where millions of people are pushed out of the formal banking sector and toward predatory alternatives like check cashers, payday lenders, and non-bank financial technology companies. Most recent data show that nearly 5% of US households have no bank account at all, they're unbanked, and another 14% still have to rely on costly non-bank alternatives, at least some of the time, they're underbanked. Combined, that's nearly 15 million households with insufficient access to the basic financial products that would allow them full economic participation. One of the primary reasons these households are and underbanked is because of the financial burden of accessing basic bank products, because of, for instance, things like just the prevalence and unpredictability of overdraft fees, minimum balance requirements, and ATM fees. So thanks in part to the Consumer Financial Protection Bureau's recent campaign to eliminate the pervasiveness of so-called junk fees, total overdraft revenue specifically is still quite big money for big banks. It was about $8 billion annually last year. So for some financial institutions, though, overdraft revenue represents their entire profit margin. Moreover, by necessarily targeting accounts that have insufficient funds, overdraft fees in particular are pernicious and paradoxical. Low-income families are significantly more likely to pay overdraft fees, and Black and Brown consumers are significantly more likely to pay any bank account fee at all. But beyond the statistics, the human experience of banking in person, especially for individuals who are low-income, Black, Brown, and or non-English speaking, can introduce even more otherwise invisible barriers to full financial inclusion. So my research has explored the range of these tangible and intangible barriers to bank access. In 2022, we sent canvassers to 106 bank branches across 5 counties in California. During each visit to a bank branch, canvassers sought information about the bank's lowest cost accounts. The study aimed to answer the basic questions, just what happens when a prospective customer walks into a physical bank branch looking for service? Are basic low-cost financial products available? And more importantly, are prospective customers, especially those who are low income, Black and or Spanish speaking, actually able to access them? So in sum, the survey found 1, a troubling prevalence of overdraft fee-based accounts, 2, a reticence on the part of bank staff to disclose cheaper alternatives, even when they existed, and 3, race and language disparities in access to information and equal treatment while banking. The first 2 findings establish an alarming lack of functional versus nominal availability of basic low-cost banking products. The survey results found that overdraft fee-based accounts were the norm in 60% of completed visits to the 3 largest banks in the sample, which are also the 3 largest banks in the country: Wells Fargo, JP Morgan Chase, and Bank of America. The bank employee mentioned an account with default overdraft protection costing about $35 per charge, capped at 3 or 4 charges per day. Only 2 bank companies, at a combined total of 3 locations, were identified as offering customers a fully no fee, no minimum balance account. The second main finding was that bankers failed to mention these low-cost accounts in a majority of instances, even when those options were nominally on offer at that bank branch. Only in fewer than 40 visits to a bank-on participating institution did bankers mention an account that was bank-on compliant. If banks don't provide information about bank-on accounts or similar no-cost alternatives, even when specifically asked, the program nor any other that relies on voluntary bank participation will never sufficiently meet the needs of unbanked and underbanked families. The survey's third finding demonstrates race and language disparities in access to information and equal treatment at banks. Canvassers of color and Spanish-speaking canvassers were turned away from banks by staff far more frequently than their white and English-speaking counterparts, 30% and 40% of the time, respectively, compared to only 4% of the time for white canvassers and 15% of the time for English-only speaking canvassers. Many canvassers reported feeling unwelcome, uncomfortable, and/or rushed while trying to bank, which I think alone is a pretty big problem. The reasons bank staff provided for turning prospective customers away included some pretty innocuous sounding explanations, like staff were at lunch or too busy to help. But the survey's findings, I think, illuminate a trend of disparate treatment that's predicated on race and language that is damaging in real terms, both by failing to provide sufficient banking services for individuals and families, and by exacerbating the historical mistrust that communities of color may have toward traditional financial institutions. The failure of the banking industry to meet demand for everybody indicates the need for more affordable and accessible options. Truly inclusive banking solutions must offer both affordable financial products and access to systems and/or staff to help consumers understand and navigate them. Such a comprehensive reform would benefit individuals and families directly through low-cost banking services offered and through faster direct government transfers, such as Social Security and other welfare payments, including, for instance, like stimulus, like we had during the early days of the pandemic. Public interest banking infrastructure would also benefit governments by reducing the threat of bank runs in the absence of expanded deposit insurance, or the consumer panics that can arise from distrust in privately managed institutions. Our banking system creates a damaging, multi-tiered economy that locks out families who can't afford to participate and inhibits government policy aimed at helping the most vulnerable. Our findings from a diverse sample of California's banks demonstrate that opt-in-only solutions like Bank On have left clear coverage gaps that will inevitably always remain without government interventions in the public interest. Thank you.
Thank you, Emily. I'll introduce myself again. I'm Cassandra De Benedetto. I'm the Executive Director for the CalAccount's Blue Ribbon Commission, which is a commission that is in the State Treasurer's Office that is doing a feasibility study to determine the best way forward to providing banking services to the and underbanked Californian citizens who deserve them. During our commission's existence, we will be producing a feasibility study in collaboration with the RAND Corporation, RAND, and I want to talk a little bit about the tasks that the commission is looking at. The first task is a survey of and underbanked Californians. This survey will get a representative sample of state residents And the data will be used to understand financial management strategies of the state's most vulnerable populations and their interest in public banking options. The second task is a landscape of banking options. This is to document the range of traditional and alternative banking options across the state, along with their associated fees and balance requirements to find where banking deserts exist, to investigate the presence and effectiveness of private sector competitors through a geospatial lens, and examine the effects of historical redlining on the current banking landscape. Task 3 is a cost-benefit analysis, which is structured to be able to allow the CalAccount program to stand up in a way that is already in compliance with state regulatory acts, and to determine the cost and benefit to multiple stakeholders, and to establish a range of possibilities for the program to be implemented. Task 4 is our impact analysis. This impact analysis will look at potential impact on racial, ethnic, and gender disparities across bank rates, short-term savings and long-term benefits for low-income families, the effects of the impact of this program on public safety, and the impact on existing banking options. Task 5 is an operational assessment, which assesses the feasibility of the proposed structure with perhaps modifications that can ease burdens, evaluate the process whereby individuals can participate without ID, and draw upon the best practices of the best practices to inform the governance of the board and public-private partnerships. This the feasibility study will be produced July 1 with a public comment period, an open public comment period till July 8th, which will include another public hearing in Sacramento for the commission to take in information from members of the public on the feasibility study as presented, with a final version with the addendum of the public comment being reissued on August 8th. Thank you all for being here today. And at this point, I would like to open it up to public comment. I do apologize. We had AV for this room and it just was not successful today. So I'm speaking as loudly as possible and would encourage you to do the same. I know there are lots of people here who want to speak. So I think for us, if you would like to line up along kind of this wall and just come up as you line up and come up, and we'll open up the floor. Very excited to see everyone here today. Thank you for coming out. With that, I'm going to open up the floor to our first public comment.
Thank you all so much. So my name is Jennifer Esteen. For the people in the back, my name is Jennifer Esteen. I am co-chair of the board of the Public Bank of the East Bay, along with one of the Senate appointees on this Cal Blue Ribbon Committee, Paulina Gonzalez Brito. And our Public Bank of the East Bay is the first public bank that will be established in this country in over 100 years, bringing the benefit of banking to our community directly. There are over 700 public banks worldwide, but there's only one in America. And that's because in America, we are governed by the ideals of capitalism and profit. And we know that banks like Chase, like Bank of America, like Wells Fargo, continue to take profits from our community and sequester them into the pockets of their shareholders. But what the Public Bank of the East Bay will do is bring benefits from our profits back into the public sector using municipal funds. And we've been meeting with the governing bodies and finance directors at Richmond, Oakland, Berkeley, and Hayward, as well as our county treasurer, to make sure that when we have the opportunity in the next few months to bring our business plan to the federal government, they will approve our public bank, and we will capitalize this bank with $30 million of our taxpayer funds to begin the bank and start investing in small businesses locally, green energy, and also public land trusts. So thank you all so much. I'm excited for CalAccount and for the public bank and what we can do together.
Good afternoon, all. My name is Teresa Rutherford. I am president of SEIU 1021. For those who don't know, I also serve on the executive board for the SEIU International Union. For those who are not aware, SEIU, it represents millions, I would say hundreds of thousands of service workers, also workers in nonprofits. Our aim and our goal is always to make sure that all workers have opportunity to access healthcare, good benefits. Having CalServe makes a difference. It creates access, but not only does it create access, it creates generational wealth. We know that banking is actually important to any worker being able to move forward just in their day-to-day lives. I can tell you that I've had coworkers who have not been able to do basic things like rent a car or stay at a hotel or even sometimes buy gas because they do not have a ATM card or they do not have a credit card. And so it does affect the ability to move forward, to live your life, to do everyday things. I can also give you an example of one situation where a coworker closed an account years ago. It was an account her parents had opened for her. She forgot about the account. It popped up in the mail. She closed the account. However, for whatever reason, Wells Fargo did not know that she had closed the account. And within a couple of months, she realized her credit was affected because she constantly was being charged on that account $10 per month. And those fees became almost like a loan that she was not paying. And that dinged her credit significantly. Her credit dropped from 700 to below 600. And she only knew this because she was also trying to buy a house. So, having access, having a bank account, it's not just a nice thing, it's essential. And we must continue to fight for this. These are basic rights that everyone should have, basic access that allows us to live our lives and move on. And so from an advocacy point of view, from a union standpoint, we must speak to this. This represents part of what we know is systemic racism, what we know holds Black and brown families behind, what we know prevents generational wealth. And so it is important that we address this and that we address this now. So the CalAccounts, a long time in coming, the goal is to see it come to fruition. And so thank you, and let's continue to fight.
Good afternoon, everybody. My name is Brandon Dawkins. I'm the Vice President of Organizing for SEIU Local 1021. Like my sister, our President, Teresa Rutherford, we both sit on the executive board. We represent over 60,000 working class families in Northern California. And before I even go into that, thank you for giving us the opportunity to come here and to speak to leaders in Sacramento and allowing labor to have a voice along with the community and the development of this essential program. So anyway, like I was saying, we represent 60,000 workers in Northern California. SEIU Local 1021, our members, work to make sure that cities, schools, colleges, and special districts have a safe and healthy place to raise our families. We also represent educators. We represent fast food workers, rideshare workers, delivery drivers. I also work for the San Francisco Department of Public Health. And, my role with the San Francisco Department of Public Health is to make sure that our families remain healthy. But just like, my role with the San Francisco Department of Public Health, I'm here to speak on another issue, to speak on CalAccount, to make sure that our families remain financially healthy. CalAccount, will help work bringing, families to be able to achieve financial well-being. It's not right that in today's world, that the more money you have, the higher of a percentage your income you have to pay for basic banking services. We hear stories of, fast food workers who aren't banked and they rely on not only check cashing places, but corner stores, where some of these corner stores, when they cash your check, they charge up to $20 to cash your check. Or some of these, workers, they rely on, check cashing places and, corner stores to, pay rent. So they have to go and they get a money order. And some of these corner stores charge $25 for a money order. So, that's just like, basic banking services that should be afforded to everybody. And, working class families who are especially struggling in this state should have to be gypped off of their funds, to satisfy the needs of, big banks, big corporations. And, unbanked and underbanked households are having to pay more for basic financial services, lack of secure means of savings, and have fewer opportunities to build credit, and are rejected for loans at a much higher rate. Financially vulnerable working people can pay an estimated 14% of their income in fees and interest. When racism and discrimination, color, and the lens hits which banks and credit unions treat working people, when the color of our skin and the language we speak play into financial incomes for working people, we know that something isn't right. The mainstream banking system has not only failed to serve communities of color, but have actively perpetuated and compounded the racial wealth gap through a range of discriminatory banking and lending practices, from redlining Black and Latino communities being less likely to have bank branches than places like check cashing places and payday lending. As a result, Black and Latino families face financial insecurity at a rate double than those of white families. Everyone deserves to have power over their finances, improve their quality of life, and have a chance at financial stability. The money that working class people make should have a chance to stay in their pockets and not line the pockets of wealthy investors and wealthy bankers and CEOs. California has taken a step in the right direction to the right of to address Black, Indigenous, and communities of color and low-income families. I can tell you from my own experience, these programs that address inequities can change lives, because the Dream for All program, where I was able to purchase a home, my first home, and build a foundation for prosperity for the next generation. We all know that California is committed to creating California for all, and CalAccount to make key things happen. CalAccount will create statewide financial service platforms to all Californians who choose to use it, and help remove the need for predatory and extractive high-cost services offered by check cashiers and payday lenders. I look forward to CalAccount becoming available to those who need it. I look forward to CalAccount moving us forward to a day where all Californians can have access to banking, no matter what race, no matter what background, and no matter how much they're paid, to be able to achieve financial security for themselves and for their families.
I say I'm impressed by how many people are here it's really inspiring to see people standing up for their rights to have access to to banking services. I'm jumping ahead of myself a little bit. My name is Rick Gerling. I'm a retired economics teacher, taught in public schools for 30 years. And I tried to teach students about banking, how to work with a bank, which, believe it or not, isn't even in the curriculum for teaching economics. It's horrible. And I think this is incredibly important. It got me, after I retired, I started working with the California Public Banking Alliance and the San Francisco Public Bank Coalition, because I believe that there needs to be a public institutions to make corporate banks accountable. It's abhorrent what is going on, and the speakers have already spoken to it, and I'm not going to go on further. I just want to say, you know, I got a bill for $28 for overdrawing my account, and I was pissed. But I have the money. I have the money. I'm not gonna say, you know, but $28 is a lot of money for a lot of people. And if that makes me pissed, I can imagine if you're on a really limited income, how pissed you would be, and you know, and how hard it is to keep that bank account balanced all the time. And I would just like to say that this is long overdue, and I heartily support it. We heartily support it, and I hope we are successful in getting it launched.
Good afternoon, everyone. My name is Varun Gupta. I'm Chief Financial Officer at Vocify. Vocify is a financial technology or fintech startup, and our business model really is to work with the underbanked individuals, provide them a high quality checking account which has no minimum balance, no fees, and work with the government agencies to disperse the benefits more effectively. We've done a lot of work with City of Los Angeles, with San Diego in California, and then with cities all across the US. And we have first-hand experience of the hardships that individuals experience when they don't have a bank account. I'm here to speak in support of the CalAccount initiative. We believe it is a great initiative, and it is a great initiative because of the following factors. As per a survey done last year, about 17% of Americans are financially vulnerable. And what it means is these 17% individuals spend more than they earn. They have little to no savings, no insurance, and they resort to borrowing from a non-bank lender. And we all know the kind of rates you have to pay when you go and you borrow from a non-bank lender, right? And then we just heard from some of our speakers that about 20% of the individuals are un or underbanked in the US. So these two numbers are awfully close if you think about it, right? So it can't just be a coincidence. So when you dig deeper into the data, why individuals are financially vulnerable, there are multiple factors, right? But one of the most critical factors is lack of access to a basic bank account. People who are unbanked, that number of financially vulnerable population goes up to 47%. So think about it, 17% of Americans are financially unstable, instable, vulnerable. But people who don't have bank accounts, that proportion is 47%. So if by providing them a basic bank account, you can reduce that amount from 47% to 30% or 25%, you will make a huge difference to bringing more people financial stability and bridge the financial inequality that exists in the system, right? Somebody mentioned 14% of gross income is spent by low-income households on basic financial services, right? That number is about 10% of the gross income, right? So if you think about the financial system, people like me on one hand get very generous credit card rewards. Who's funding those rewards? It's the low income households who are paying exorbitant rates on their credit card balances, who are paying overdraft fees, who are paying all sorts of fees for just basic financial services, right? So it's an upside down system where the poor people are paying all the fees, and then people like me are getting all the benefits, right? And that system is sustainable for the banks, but it's not sustainable for society, right? And that's why the CalAccount initiative is so powerful, where you can actually help bring people into the financial system so that they can start collecting their paycheck without having to pay to just access their own money, right? they can start paying their bills without having to pay a fees. They don't have to look over their shoulder all the time because they're carrying cash in their pocket, right? Just think about the psychological benefit of not having to look over your shoulder because you're not carrying cash anymore, right? So the bank account, a very simple thing, can make a huge difference to bringing stability, to building wealth, and addressing some of the inequality that exists. We as a company have done that with the city of Los Angeles, and we have seen the difference that it makes. And as you go into your feasibility study, we will be happy to, share our insights and how we can work together. But great initiative, and we hope it becomes live soon. Thank you.
Good afternoon. My name is Wesley Alexander. I'm the CEO of CoBiz Richmond. It's an intergenerational co-working space, meeting space, event space, as well as a business incubator for the people, for the businesses, for the nonprofits, the startups, the creatives, the students, the working professionals, and the returning citizens in the community of Richmond, California. If anyone has read The Color of Law, first chapter highlights redlining in the city of Richmond and in the Bay Area. And interestingly, Richmond is actually 70% composed of diverse individuals, Latino, African American, and AAPI. However, there are barriers to not only banking, but also to food, the food desert, also the quality education, and many other entrepreneurial support services that will make a thriving, economically thriving, vibrant community. With that said, our space is focused on building wellness entrepreneurially, professionally, and personally in underserved communities, starting in Richmond. With that said, that's the reason why I'm here to advocate for CalAccounts to ensure that stakeholders have access to banking services, because banking services are truly affordable. And I will speak from the perspective of entrepreneurship and nonprofits that serve their communities. If people as personally are underbanked or unbanked, the potential for them to be able to access capital for their business or for the nonprofit or whatever endeavor is also critically harmed. How did this show itself? During the pandemic, within 3 months of the pandemic, 41% of African American businesses and 26% of Latino-owned businesses closed. We're not talking about 10 businesses or 100 businesses. We're talking about more than 500K businesses in this country that closed within 3 months, never to open up again. And why did they close? A lot of them didn't have a relationship with the bank. They didn't have the financial statements. They didn't have a bank account to show what they have invested in the business and what they have earned. As a result, they couldn't even apply for PPP or for the SBA program, which is the EIDL program. Now, in order for them to apply for many of these programs, a bank had to submit the application for them. So we can see that by not having access to a relationship that a banking can provide, it totally eliminates them from an opportunity to provide not only for their employees, but also for their own families. And who knows what kind of depression that might have led to, or disruption in the household, and destabilization of communities. So with that said, this is a very, very important endeavor to create a doorway, to create an access point for people to be able to be welcomed in the bank, to be able to ask questions on how can this bank serve me, and to be able to understand their options. I would just like to close with this particular item. Just because you're underbanked or unbanked does not mean you're not talented. It does not mean that you don't have the capability to be successful, to take care of your family, to be able to be a good citizen in your community. But we all know that system was designed to facilitate inequities. It's our job to facilitate prosperity. It's our job to create wellness. And this is the right step in the right direction. And any decision makers that are evaluating this, you need to come into those communities or simply read a book like The Color of Law to understand that what you see is by design. It is our job to fix it. Thank you, guys.
Good afternoon. My name is Brandon Green. I'm the policy director for the Western Center on Law and Poverty. I'll try to be brief in my comments. The Reparations Task Force, the first in the nation, details extensively the financial and other harms that have been perpetrated against Black descendants of slaves. These harms borne by discrimination in government funding, job access, banking, etc., are responsible for the racialized wealth gap in which Black Americans have approximately 13% of the net worth of white Americans. That is approximately 24,000 as compared to approximately 188,000. When viewed through these basic facts, it's easy to understand how the current banking system, in which people have to have minimum balances, not only to access free checking, but also to access additional services and benefits, would disproportionately harm Black and other communities of color. The monetary reasons are not the only ones that exacerbate the numbers of unbanked and underbanked individuals. A 2021 FDI survey revealed that the second most cited reason for individuals not having a bank account was that people don't trust banks. And as Dean Darrell Carl said in his Boston Globe editorial, the reasons are numerous. They've seen banks disappear from Black communities. Banks have unfairly denied them home and business loans. Some have witnessed firsthand the abuse, theft, and corruption by the government and private sector. The reality of the discrimination is still pervasive in pop culture. In his recently released self-titled Netflix show, Vince Staples has an episode where he, a successful rapper and creative, enters the bank for a loan and is discriminated against, ironically because his success is not enough for the general clientele served by the bank. This week, we all saw District Attorney Fannie Willis and her father testify about how she was taught to keep cash. I myself was always taught to have shoebox money just in case the institutions that have failed us over and over again continue to do so. Especially in these times of increased housing costs and inflation that perpetually move the goalposts, where today you may be able to maintain the minimum balance, but next week you may not. People should not be penalized for things that they can't control. If our state is serious about racial justice and racial equity and in bringing concrete solutions to the many harms highlighted by the Reparations Task Force, this is the first and necessary step. Thank you.
Good afternoon, everyone. My name is Lorena Flores Martinez, and I serve as the Associate Director of Partnerships at MyPath. Over the past 11 years, I've had the opportunity to wear many hats within our organization, which is based in San Francisco, California. At MyPath, our primary focus is on empowering youth and young adults aged 14 to 26 through various initiatives, including youth leadership and advocacy programs, financial mentorship, guaranteed income projects, and technical assistance for workforce providers integrating financial capability. Our journey began in the Mission District of San Francisco as a youth credit union program. And since becoming an independent nonprofit in 2007, we've remained committed to our mission of financial empowerment for young people. Our work extends beyond San Francisco, reaching cities like San Jose, Reno, San Antonio, Houston, Newark, New Jersey, Seattle, and more. Although collaborating with our neighbors here in Oakland has presented unique challenges due to the prevalence of financial deserts, which may not be surprised. Financial deserts, much like food deserts, pose significant barriers to accessing banking services, particularly in communities historically marginalized by practices like redlining. This lack of access perpetuates economic disparities, denying individuals the opportunity to build wealth and participate fully in the economy. It is a stark reminder that systemic issues persist, requiring concerted efforts to meaningful change. To address these challenges, we advocate for systemic reforms and increased community investments from financial institutions. In California, a state known for its wealth and innovation, it's imperative that we prioritize equitable access to banking services for all residents. MyPath supports the establishment of a fee-free and penalty-free transactional account statewide, ensuring that financial barriers do not hinder individuals, especially young people, from managing their finances responsibly. It's also worth noting that there is a need for statewide non-custodial accounts. This means the account should not require parents to be actively involved. We have a saying at MyPath: if young people are old enough to earn money, they are old enough to manage their money. We must also recognize that banking initiatives alone are not sufficient. Education and support are essential to empower individuals to navigate the financial landscape successfully. MyPath emphasizes the importance of account education and fraud prevention measures to safeguard against financial exploitation and ensure long-term financial well-being of our communities. As we strive to expand banking services, it's essential to acknowledge and address underlying trust issues. Building genuine relationships and providing personalized support is key to fostering trust and ensuring success for any banking initiative. We must prioritize human connection over technological advancements, recognizing that accessibility extends beyond digital interfaces. In closing, I want to express my gratitude to Rise Economy for this opportunity to advocate for meaningful change. Together, let's work towards a future where every Californian has an equal opportunity to achieve financial security, prosperity, and American dream.
It's time for us to say the ugly truth. Banks see low-income people as a consumer, as a way to make money. Nothing more, nothing less. We ask people of color, why are they unbanked? Why do they use other unhealthy services? When banks, at every point, there's a fee. Whenever you use your debit or credit card, there's a fee. Whenever you don't use your debit or credit card, there's a fee. Whenever you don't have enough money in your account, there's a fee. Let that sink in. We're taking money from people that barely already have money. I have a friend currently that doesn't have a bank account because it costs too much. And it's not right to talk about this conversation without bringing up the fact that the requirement of social security cards and social security numbers prevent undocumented people from banking as well. So again, back to what I said about everything costing a fee. So how can we tell Black people, when Black people say that like, oh, the bank is something that we can't trust, the bank is just after my money, how can we tell them that it's any different when there's a fee to like everything? I want to bank at a bank that I could go to sleep at night and not worry that fees will take my money. I want to go to a bank that I can make sure that everything is safe when it comes to my money. That's why I want to have CalAccounts, because CalAccounts have zero cost and zero penalties. CalAccounts is for Californians, and they put Californians first instead of profits. Thank you.
Trabajo en Taco Bell y vine a apoyar a CalAccount.
Dulces Canales.
Dulces Calente, I work at Taco Bell and I came to support.
Stacy Porfala, and I'm a financial empowerment specialist with the International Rescue Committee. And I work here in Oakland, and my background before that, I have 20 years experience in payment technology here in the Bay Area, where I really focused on the needs of un- and underbanked consumers and getting affordable access to basic banking and building financial literacy. Thank you today for allowing us to provide some client experiences with the California banking system. Just to give a little bit of perspective of what our organization is, you may think of us outside the US, but here in the US, we work in 28 US cities. We have 7 offices in the state of California. We focus a lot of our work on economic empowerment, where we help families build stability. Together, we work with them to open their first bank account. We teach them about credit, about rent, auto loans, taxes. So they're learning all of this at the same time while they're, working on their language skills, creating their first resume, learning interviewing skills, and trying to get that first job. So last year in the state of California, we supported about 6,800 people in our economic empowerment programs. We provided about 2,500 coaching sessions, financial coaching sessions, and directly supported 750 people directly into their first jobs. We also have a CDFI, so a Community Development Financial Institution based out of San Diego, where we offer loans for low-income consumers. Last year, we provided about 740 loans, about $3 million in loans. And of those loans, 60% were fee-free credit building loans. So we're really working with consumers to begin their journey in the United States, begin their financial journey. So my comments will just kind of focus on 3 areas, some challenges our clients often run into with bank account opening primarily. And this can kind of come in 3 areas. Just the complexity and time required to open an account, issues with documentation, and fees. And we've heard a lot about fees. And this is why we're also very excited about the CalAccount option. For many of our clients, we have to book an appointment in advance to get to a bank, and there are very few appointments available. And each appointment can take an hour per person. So it takes a lot of time, coordination, and effort. When we add in transportation and language requirements to that, it really adds even additional complexity. Our service area is Alameda and Contra Costa County, so we've got a huge footprint. We've got clients living all throughout the Bay Area. They often don't have transportation, so we're arranging rides to get people to banks and to try and match them up with a staff person to go into the bank and work with the bank staff person. What we often find is from the same bank or across multiple banks, just incredible inconsistency in the process, what's required, what is asked of our clients in order to open a bank account. Last month, I had an Afghan couple who husband speaks English, wife doesn't, but they weren't as comfortable in the bank branch because they don't know, the U.S. banking system. So they didn't have the language for the U.S. banking system. So we had them accompanied by a staff person, and we had a translator on the phone. And the staff person there told us that the translator could not participate in the session unless they were there physically, which we just had never come across that before. So, it's just every step of the way is a slog and a barrier. Also, I would say there's just very limited documentation that our clients can sign in a bank in the language that they understand. So they're signing a contract in a language they don't understand. Also, I think another huge challenge is not true with all banks, but with many banks, it takes 10 days to receive your debit card. So you open a bank account, you deposit your money, and you have no access for 10 business days. It's really a challenge for our low-income clients. So I'd like to reiterate just the importance of when the product is delivered is really convenient walk-in locations where people can go and open bank accounts. I think a digital option makes a lot of sense for some clients. For some of our clients who've come from other parts of the world where mobile money is more common, they do have some familiarity with doing some online banking. So I think we should think about every and all possible options for making access as easy as possible. I also think that through digital channels, we can support many more languages, and that will, just be more inclusive for consumers. And then anywhere that we have face-to-face account opening, there should just be instant debit card issuance and walk the consumer right out to the ATM to teach them how to use it and deposit their first deposit in their bank account right there with the ATM card that they just issued. Some credit unions do that, but a lot of banks do not. Next issue, documentation. Sorry, I'll make this faster, is documentation. We have people who are not permanently housed. We have people who don't have formal documentation yet in the United States. They may not have a social security card. Their passport from their home country may be expired. And we have trafficked individuals whose documentation just doesn't exist. So we have a number of our clients who get ITINs, but it can take up to 3 months for a client to get an ITIN number in lieu of a social security number. So it's just the documentation process and what's required of the banks feels intentionally difficult. I would say, there are options to address this. In my old work, we used to do this. We can manage system-based risk by people who don't have a lot of identity. You start them with a low entry point bank account, and as they need more services or want to deposit more money, you can then have them over time provide more identity information. So there should never be a barrier if someone doesn't have identity information to be able to even open a basic account. And then I would say the last thing is fees. Our clients also have a lack of trust often from their home country experience of banks. So they seek out a brand name bank, and the brand name banks are the ones that have the most egregious fees. I was working with a client last week. He'd only been in the US 3 months. Doesn't have a job yet, so can't get the direct deposit free account. So he took his life savings, plunked it in the bank, put some in the savings account, some in the checking account, charged $12 a month for the checking account and $5 a month for the savings account. So the one thing I can say about brand name banks is they do have a good ATM footprint. So it makes it easier for people to get cash out and cash in. So that's hugely important into the CalAccount design, I think. But other than that, yeah, the big banks are very expensive. So final recommendations, I would say we obviously, and I've seen it in the proposed bill, one is just have a vast free ATM network and a cash deposit network for people working in cash and Tiffany environments. And thank you. Thank you for considering.
Hola, muy buenas tardes. Mi nombre es Guille. Muy buenas tardes a todos. Me da gusto que estemos reunidos por algo tan importante como es hablar acerca de la banca.
Good afternoon. I'm very glad that we've all gotten here together to speak about something that is so important as banking.
Ya, yo trabajo para McDonald's hace alrededor de 20 tantos años.
I've been working for McDonald's for over 22 years.
Ya, tengo una cuenta con Banco de la América desde hace más de 20 años.
I've had a bank account with Bank of America for over 20 years.
Y nunca he recibido un beneficio o un apoyo por tener mi cuenta allí.
I've never received any sort of benefit or any support for having an account there.
Cuando ellos cambiaron que dijeron que las personas que teníamos menos poder adquisitivo íbamos a tener una banca por línea en el teléfono.
When they said that they had gotten to the point where they were gonna have less
money.
Less we were gonna be able to have
online banking. We need to do all the stuff, all the money. We need to deposit my check and outside en los cajeros.
At the cashiers.
Yeah, in the cashier. Y dijeron que no iba a haber cargo alguno. Hace como.
They said there wasn't gonna be any sort of charge or fee.
Yeah. Hace como 3 años empezaron a hacer cargos de 9, luego 10 y actualmente $12.
Years ago, they started
Por manejar la cuenta.
They started having
Siendo que
charging
nosotros
fees for using your account, starting with $9.
Yeah.
Cuando digo $9,
$9 and $12 right now, right? Ahora ellos dicen, yo les dije, ¿por qué me estás cobrando?
And now I've told them, why are you charging me?
Si yo deposito mis cheques de mi trabajo en tu cuenta,
If I deposit my checks
y de
from
allí
work in your
ellos,
account,
y de allí yo reparto mi dinero para pagar mis tarjetas, pagar mi renta y hacer mis pagos que necesito
from there I distribute my
dentro de mi cuenta hacer.
There I have to pay out money to pay my cards, my rent, and make the other payments that I have to do with my card.
Dicen
My
que
account.
primero me dijeron que porque yo no tenía el suficiente dinero para que ellos no me cobraran. Yo tenía que tener creo que $1,000 o $3,000 en la cuenta para no tener cargos.
First, they told me it's because I didn't have sufficient funds in the account. They told me that I had to have either $1,000 or $3,000 to not have any charges on my account.
Entonces le digo, yo tengo más porque yo deposito mi cheque, aunque se vaya deduciendo para los gastos que necesito yo hacer.
So then I said, I do have more money because when I first deposit my check, I deposit all of the amount that I have to be using to make all of the payments.
Te dice, es manejo de cuenta.
That's how you manage your account.
Entonces, ahora que me dijeron, que me hablaron de que necesitábamos nosotros un banco como CalAccount que fuera libre, un banco que fuera libre y seguro para nosotros los que tenemos menos ingresos. A eso vine yo a apoyar que nosotros los californianos tengamos derecho de tener una banca gratis y sin cargos escondidos.
Now, when you had been told about this account that you were going to be opening, CalAccount, I was free or happy to come and support an account where you're going to be free of any fees and any hidden fees.
Ya. Por ejemplo, mi esposo ya está grande, él tiene una cuenta en Chase y me dijo, en Chase ahora en adelante me van a cobrar $10. Siento que anteriormente no cobraban dinero por tener su cuenta.
I have a husband, an elderly husband, who said, I have had a Chase account for many years that was charging $10 a month, and now it's going to be,
Yeah.
and it's now going to be zero.
Tiene, por ejemplo, he has $100, something like that, right? It's only for pay the gas, only for pay something smaller, right? And then I say to him, you need to take off the money because later on you don't have any money in the account, right? Entonces le dije, entonces si ya no necesitas tener tu cuenta, vas a tener que guardar tu dinero como antes, abajo del colchón.
And then I told him, if you no longer
Yeah.
Now I said, if you no longer have an account, then you're going to have to save it like we did in the olden times, under the mattress.
Porque entonces, si traes tu dinero, he has a 70 years old, if he put the money in the pocket, maybe he lost the money, right? That's why we need to have the free banking account for all people that we don't have enough money, right? Yo conozco a lot of co-workers in the McDonald's, they don't have a cuenta en el banco,
That don't have a bank account.
y ellos van a tiendas de cash checking o liquor stores, y ellos van y cambian sus cheques y les cobran dinero, les cobran mucho dinero por cambiar sus cheques.
And I have people that I know that go to check cashing places or liquor stores, and they go there to cash their checks, and they are charged fees, large amount of fees to charge, to cash their checks.
Entonces, por eso estoy aquí yo, para decir que hay que luchar y hay que trabajar para que California nos brinde ese servicio de tener una banca gratis, sin cargos fees, a nosotros los que no tenemos muchos ingresos.
I'm here to tell us, to come and talk about this account, to be able to have an account where they're not charging us all of these fees.
Yeah. Por eso estoy aquí para eso. Muchas gracias.
That's what I'm here for. Thank you very much.
Guillermina Calvo.
Despacio para poder decir algo de lo que ustedes están diciendo.
Mi nombre es Josefina Ramos
My name is Josefina Ramos.
y tengo una cuenta con Wells Fargo hace mucho tiempo,
I've had an account with Wells Fargo for a long time.
pero nunca me había dado cuenta que me cobraban dinero. Yo metía dinero y yo decía, pero ¿por qué $10? Y lo dejaba pasar y lo dejaba pasar.
And I had an account where I was depositing money, and I saw that I hadn't seen that they were charging me $10 and $10 for my account, and I said, what are these fees for?
Ya, y una vez mi amiga me dice, el banco cobra dinero por tener la cuenta abierta. Le dije, no, a mí no me cobra.
And my
Porque,
friend said one day, the bank does charge you a fee for having an open account, and I said, no, they don't charge me.
ya. Y entonces un día le digo yo, no, no me cobra porque me transfieren $25 cada mes de mi cuenta de cheques a la de ahorros.
And I was telling them, no, they don't charge me anything because every month they'll transfer $25 from my savings account to my checking account.
Ya, entonces miré mi statement y sí, tengo $10 que me quitan cada mes.
I looked at my statement and I said, I see that, yes, there's $10 that are being charged every month.
Cuando con ese dinero puedes comprar otra cosa, ¿no?
And with that amount of money, well, you could buy something else, no?
Y luego te cobran $35 por fees.
And then they'll charge you $35 fees.
Sí, te pagan lo que iban a pagar, pero te están cobrando $35.
Yes, they made the payment that you were gonna make, but for that, they charge you $35
Cuando te dicen que va a ser gratis la cuenta.
after they have told you that the account is gonna be free.
Porque eso fue lo que me dijeron.
Because that's what
Cuando
they
la
told me when I opened it.
Porque iban a ser los $25 transferidos a la de ahorros para no cobrarlo.
Because it was gonna be that $25 were gonna be transferred from the savings in order to not charge me.
Ya está.
Thank you. España.
Vengo de Oakland, California.
I am from Oakland, California.
Trabajo en Wendy's
I work at Wendy's
y vengo en apoyo de CalAccount.
and I'm here in support of CalAccount. That's all.
Mi nombre es Guadalupe Sánchez. Yo trabajo para McDonald's. Saliendo California. Saliendo California.
My name is Guadalupe Sanchez and I work for
McDonald's.
McDonald's in
Saliendo California.
California.
Y vengo en apoyo para CalAccount.
And I am here in support of CalAccount.
Thank you.
My name is Claudia Romero. I'm coming from, what is it called? From Hayward, and I work at McDonald's. Sorry, check in the box.
Vengo a apoyo de CalAccount y me beneficiaría mucho a todos como trabajadores de comida rápida porque yo como madre soltera, cambiamos el cheque en una tienda y nos quitan un porcentaje.
And here in CalAccount, in favor of CalAccount because as a worker that works in fast food and a single mother, we work.
Y nos beneficiaría tener un banco para así ese porcentaje que nos quitan, pues dárselo de alimento a nuestros hijos, en vez de dejarlo en el banco para otras personas.
And it would benefit us all to have that amount that is that to use that percentage that we're being charged to feed our children. She said milk.
Okay, por eso tenemos que apoyar a CalAccount para que así nos beneficiemos todos como trabajadores de comida rápida.
That's why we should support CalAccount so that we can all benefit as workers and in fast food.
Thank you.
Thank you.
¿Qué tal? Muy buenas tardes. Mi nombre es Yulisa Villa.
Good afternoon, my name is Julissa Villa.
Sí. Trabajo en Tobos de Castro Valley.
I work at Tobo's in Castro Valley.
Y yo vengo en este momento para poder apoyar a CalAccount.
And in this moment, I'm here to support CalAccount.
Okay, gracias.
Thank you.
Hi, my name is Jocelyn. I'm from Castro Valley. Estoy aquí para apoyar a CalAccount.
I'm here to support CalAccount.
Soy Samantha.
Hi, my name is Samantha.
Vengo de Castro Valley.
I'm here from Castro Valley.
Y vengo a apoyar a CalAccount.
I'm here to support CalAccount.
Buenas tardes, mi nombre es Beatriz.
Good afternoon, my name is Beatriz.
Yo trabajo en Roundtable en San Leandro
I work at Roundtable in San Leandro,
y estoy aquí para apoyar a la.
and I'm here in support of CalAccount. Good afternoon, Sanchez. My name is Cruz Sanchez.
Trabajo aquí en McDonald's en Oakland.
I work here at McDonald's in Oakland,
Y estoy para apoyar también.
and I'm also here in support of CalAccount.
Buenas tardes, mi nombre es Romualda Cruz. Trabajo en Wendy's y
Good afternoon,
vengo
my
de
name
Oakland, California.
My name is Romualda Cruz, and I work at at Wendy's.
Y para nosotros, los trabajadores de comida rápida, sería muy bueno CalAccount. ¿Por qué? Porque nosotros vivimos de cheque a cheque.
For us fast food workers, CalAccount would be very good because we live paycheck to paycheck.
Y cada vez que vamos a cambiar nuestro cheque, nos cobran de $21 a $25.
And every time we go to cash our checks, they charge us between $21 and $25 every time we want to cash a check.
Y si a nuestro empleador se le ocurre darnos 2 cheques,
and if that employer means all of a sudden giving us 2 checks,
entonces ya son $42 que tenemos que pagar.
then it'll be $42 that we must pay.
Para nosotros sería muy bueno CalAccount para apoyarnos en esto.
So for that, it would be great. CalAccount would be great, and so that they can support us with that.
Muchísimas gracias.
Thank you.
Hi, everyone. I'm Sylvia Chi. I'm a senior policy analyst and attorney. I work for an organization called Just Solutions Collective, as well as with the California Public Banking Alliance and the San Francisco Public Bank Coalition. I really appreciated hearing everyone's testimony today. I just wanted to add a couple more points about the policy impacts. Some folks may have heard that the federal government is proposing a rule to limit overdraft fees from the Consumer Financial Protection Bureau. And I just want to note that that rule is still proposed. It is not finalized. And the banking industry is pushing back against it very hard. So there's likely going to be a prolonged fight through that before it gets passed, if it ever does. And it's also important to note that as banks reduce or eliminate overdraft fees, the overwhelming majority of bank accounts will still impose overdraft fees. So while there's a trend that exists, there's still an overwhelming majority practice of imposing these fees. And the banks not only are resisting the proposed rule, they're likely to litigate against it at some point and are currently supporting and hoping for a new administration in Congress, which will reverse it. In addition, we can expect banks to increase other fees and restrict low-income customers' access to banking services. Banks have offset limits on one type of fee in the past by increasing other kinds. So that's where, they'll come up with a new type of fee that we've never thought of before. When Congress imposed limits on debit card swipe fees in 2010, banks offset their losses by increasing monthly maintenance fees. So we're likely going to see some more creativity from them if we see this rule again. The Consumer Bankers Association president and CEO said recently that limiting overdraft fees would influence whether banks provide free checking accounts as well. We've already heard a lot about how this is a matter of racial and economic justice, so I won't repeat the points that everyone has made already, but just to affirm that it is a a huge issue that we should try to do whatever we can to address. And finally, one thing that hasn't been mentioned yet, but which is something that I care about, which is very wonky, is FDIC insurance. I know that some policymakers are concerned about that. And the legislation creating the study for CalAccount specifies that this product will be federally insured. So it will be as safe as any existing banking products. And when the legislature actually implements CalAccount, they can be sure to include that requirement in the law as we're recommending. Various financial technology companies already offer federally insured accounts without having physical branches like MocaFi or Apple Pay. So this is definitely feasible. There's also no guarantee that those companies will keep offering them or keep offering them on affordable terms so that it's actually accessible. So that's why we really need CalAccount. So in conclusion, Californians need what CalAccount guarantees: a fee-free way to access their wages and public benefits, and that will remain fee-free regardless of the fate of federal rulemaking and the results of federal elections.
Before I close, I just want to make sure that everyone's had an opportunity to speak that would like to speak today. Is there anyone else in the room? No, awesome. I just want to thank all of you for coming out here today. It's been wonderful to hear from so many members of the public. I appreciate the time and effort and energy that you're giving to this program and to speak out about your experience in the private banking sector and about your feelings on the need for the CalAccount program. I appreciate it. Thank you very much for coming. Have a great day.
We met on Zoom one time.
Sure, yeah. And we, yeah, right.